The Federal Reserve is preparing to raise interest rates. However, the central bank is not doing so just yet and is leaving rates at near zero for now.
In today's announcement, Chairman Jerome Powell cited high inflation and a strong labor market as the reasons behind the decision. The Fed slashed interest rates to near zero in March of 2020 when the pandemic hit. Investors expect the first hike to happen at the Fed's next meeting in March. Well, today's big announcement will impact mortgage rates. So what does that mean for those looking to buy a home? Yeah,
let's turn now to Fox 12's Haley Rush. She spoke with a mortgage expert to find out. Haley?
Mortgage rates are already rising, most recently reaching the highest point since March 2020, the start of the pandemic. And while we don't know exactly what rates will look like in the future, we do know they're still historically low.
The Federal Reserve is getting ready to raise interest rates, most likely in March, to help tackle growing inflation, though they haven't said by how much. Before today's announcement, some mortgage experts expected rates to rise by almost a full % this year.
Since the first of the year, we've seen a tip up.
Julie Felsman is a local mortgage lender. She says you need a crystal ball to say for sure what rates could rise to, but they're already inching up. The average 30-year fixed rate is 3.56% right now. A week ago, we were looking at 3.45%. The week before that, 3.22%.
And that was as low last January, just about exactly a year ago, as 2.65%. So we've seen, almost a 1% increase over the course of the past year.
But Felsman says rates still remain historically low.
During the 2000s, as the housing market was really heating up, we had some of the busiest years of real estate sales we ever had. Interest rates were in the 5s and 6s. And we get spoiled very quickly and we lose sight of that.
So what does that mean for home buyers as interest rates are creeping up, assuming you're looking at a 30-year loan?
If you're borrowing $500,000 and interest rates increase 1/8%, your mortgage payment will change by about $35. That is scalable. So if interest rates increase 0.3%, that's going to be close to $100 change in monthly payment.
While impactful, Felsman says she doesn't think that will stop a lot of people from purchasing homes, but it will make it less likely that someone will want to refinance if they already have a better rate.
And for anybody who didn't refinance in the last couple of years, if you didn't refinance in 2020 or 2021, you may want to talk to a mortgage professional and just assess your situation and see if there's some money to be saved with interest rates where they are right now. Or if you have seen your home value go up with the big increases we've seen in home values, a lot of folks are sitting on a lot of home equity.
Talking about average rates in the story, like that 3.56% we're seeing currently, but it's good to remember rates are specific to an individual and based on a ton of factors like credit scores, property type, and loan term. Now, if you do want to pay off a mortgage early and potentially cut down on some of those rising interest costs, we've provided tips from Felsman at kptv.com. Haley Rush, Fox 12 Oregon.